Well, hey there, it's Tyrone Jackson, the Wealthy Investor, and I wanted to take this time to share with you some investing tips in the stock market so that you can invest like a millionaire. Okay? 2019, very interesting year. We've got a lot going on in the world, and the stock market is actually seeking stability. Stability. So I want to show you something I think is really interesting. When we hit a market like this, one of the things I want you to keep in mind with your investing stocks you're holding for the long term is you want to be where the institutional money is. Notice that this is Boeing, a member of the Dow Jones Industrial Average, and look at this 5-year chart. Notice how it just keeps going up and up and up and up and up and up. And it's ended where it is right now, which is approximately $405 per share. But 5 years ago, just 5 years ago, the stock was trading at what? $128 a share. Why am I showing you this? Because I want to show you a pattern. Boeing is a mature company that has contracts with the United States government. So the revenue that you often hear me talk about, known as top line revenue, is built into the contracts with the government, and that means that the top line revenue is going to grow 2, 3, 4, 5, 7% annually, and that's why you get a chart that looks like this. Picking stocks is not about luck, it's about learning a methodology that actually works over time. Okay? Now, if you look at a stable company like Boeing, you would say, well, sure, I'd love to own the shares, but I want to show you a company that is in a growth mode and it's not doing a good job at it, and that is Snapchat. Now, I've talked about this before, ticker symbol SNAP. Why do people lose money in the stock market? Because they guess, they speculate, they don't have a financial education, they don't know how to choose company with rising revenues. They just open a brokerage account and choose companies that do what? Nothing. They just like the name. Don't make that mistake. You're going to lose money in 2019 if you try to follow that. Look at this stock just constantly down, 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 down to where it is now, $8.54. So even if you bought some shares just to speculate at 27, what has happened to your investment? Down, 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 down. Okay? The reason this keeps happening to you is because you're stuck in the wrong trend. I'm going to show you just a second what I mean by that. Look at Domino's Pizza. Right? Okay, so this is when I started recommending 3.5 years ago. 5 years ago, the stock was around $58 a share. I wait for the $50 cross. That's my thing. And then I really start following the revenue because after $50 is where you get a lot of interest from institutions. Notice that this stock tends to rise, right? Over 5 years, there have been a lot of changes in the economy. It does pull back from time to time, but what is it doing? It has a strong upward trend. Why? Because of their marketing, and they have grown what? The top line revenue, right? To where the stock is now, which is around what? 288. Where was it 5 years ago? $58 a share. Why do I keep picking these stocks? Because I've learned how to pick the same pattern over and over and over. It's not luck, it's skill, it's a system. Compare Domino's with Twitter. Now look at Twitter right here. Notice Twitter, ticker symbol TWTR. What has it done? It's in the same market as Domino's Pizza. What has the stock done? Clearly, it is underperformed. How could you have this two stocks that are in the same market and one is not rising? Because choosing stocks is not a popularity contest. You must understand revenue. If you're going for the quick buck and trying to choose social media stocks, that's not going to work in this market. Finally, another stock that doesn't get a lot of coverage in the media, but I want to share it with you, is Estee Lauder. Right? Look at the stock over the last 5 years. Gone from a low of $70 a share. Now, what I like about this company is they've done really well marketing their products online. We're in a digital world. Look at the stock takeoff here. Pretty picture. Even though it's off its high of 158, it does what? It hits a bottom and it retraces. Why are we seeing the same pattern in Boeing, Domino's Pizza, Estee Lauder? It's because of this dividend. Okay? Now, if you don't understand dividend and yields, let me explain it to you. A dividend is your share of a company's profits as a shareholder paid out on a quarterly basis. Notice that this dividend here is $1.72 divided by 4 when the dividend is paid. That's 43 cents a share. When this dividend starts to be paid, you get a chart that looks like this. Why? Because the institutions can buy millions and millions of shares. If the stock doesn't move, they're still making money off of what? This dividend here. The yield is based on the stock price. So if an institution or individual buys into the stock right now, they're getting 1% on their money annually because they bought the stock at 152. Compare that with a company like Yelp, which does not pay a dividend. Here's the same pattern. It is on its way down. So what am I trying to teach you in this video? Dividend, right? Like we see in Estee Lauder, it's going to attract institutional investors. The fundamentals are there. That's why they're paying out a dividend. That's how you get a chart like Estee Lauder. That's how you get a chart that looks like Domino's. That's how you get a chart that looks like Boeing. You want to make a lot of money in the stock market this year? Stay with the dividend payers. That's where the institutional money is. Remember, in this market, dividend is everything. Get that financial education. Learn how to choose stocks better, not just social media stocks, because you tweet. That's not really going to make you a lot of money in this market in 2019. Okay? So if you want to follow me, go to thewealthyinvestor.net. Download my free ebook on cover call writing, dividends, and institutional money. And guess what? You'll be getting that financial education. Or if you really want to put yourself in the fast lane, just follow my trades at WI Trade School where I answer your trading questions. And I just posted a lesson on hot stocks for 2019. Either way, whether you wind up at WI Trade School or you take my free ebook at The Wealthy Investor, guess what? You're putting yourself in the fast lane by getting what? A financial education. And that's what you need to choose really good stocks. Hey, let me know what you think about this video. You can leave a comment for me. And if it's good, I'll actually answer it. But remember, you want to be successful financially in the stock market? Learning how to choose winning stocks that pay a dividend is what 2019 is all about.